Hello and welcome back to the Sovrenfx YouTube channel. So today we're going to talk about counter trend trading. The previous video talked about trading with the trend. So this video is going to be a really short video since you're going to go over the same principles we used with trading with the trend. Okay, so it's really simple. When price is going in a certain direction, always when you're in the market, you want to have two biases. You want to be fluid. You're always going to have your buys, the normal trades, and you're going to have the small scalps. So this is how the market moves in waves. Okay, so how do you get to, so these are the normal trades you would have taken, but how do you get to take counter trend trades? So here's what I do. If price is bullish, you wait for it to make a support, right? Wait for it to break the support. Okay, wait for it to come back and retest the support, and you can take your first entry here, more risky, and safer entries as we break the newly formed support for further downside. So these are basic market structure and how market moves. So in candles, let me see if I can find a nice example to show you on the candles. So let me give you a hypothetical. Okay, so you can see price moved up, and as you know, price moves in waves, and when price makes support, you expect it to move to the next range. Or in fact, we took this trade with the members. I'll show you at the end of the video, or maybe join the Telegram. You can check it on the Telegram. We took this trade today as price broke above and we had a stop loss below the previous. It was actually a 30-minute trade previous, so riding it to the tops, and we've hit take profit just right now. Okay, back to what the video is about. So how would we have entered a counter trend trade? Here's how. When price breaks below this support, pulls back, makes resistance, you enter your first trade. It's not able to break this price. Here you could enter a second trade and wait for it to push to the lower end of the range as you target premium buys. Here you could have buys which could have been maybe swings for the week. If it's on a Monday or a Tuesday, you take a counter trend as you wait for the higher time frame buyers to kick in, and as market shifts its orders. Okay, so let me show you an example that we would have taken today. Actually today we missed two trades, but we sat there and watched with the members and realized how we would have taken the trades. So earlier, let me clean the charts. As you can see, gold was in an uptrend, but we had our resistance over here. These are our key levels we were looking at here. We could actually drop down to the 15 minutes chart to find more key levels. So this was another key level. Okay, so remember, key levels are actually zones, they're not particular prices, and that's why you like to have a rectangle over. But for the sake of the example, let me just use lines as key levels. So here are the two trades we missed during our session. Okay, so we were expecting price to hit this level and move back down. And why is that? If you can look at the 4 hours, I talked about this on the previous section, just the last video about trading the trend. You have to check your 4 hours, and as you can see, price has been heavily bearish. It's been ranging, it's not making a clear cut move above. So while we're looking at the market, we weren't expecting price to break above this level, since we have a key level here, a support made the previous time price hit this area. So that's what we are looking for. As you can see here, we didn't enter a breakout buy because first of all, the range was only 20 pips. We only enter trades when ranges above 30 pips, and the previous candle had filled half the range, so we just sat and waited. And when price moved below, this is what we call a fake out, and we usually execute on these fake outs here and having our stops just above the zone, in the middle of the range, I mean, for around 13 pips, as you expected it to come back and touch this area. So this would have been a 1 to 2.5 risk to reward trade, but we just chose to sat. So we just sat and watched it work its way down, no emotions involved. So today was just basically watching price on gold, since we took our trades on GJ. Something else, here was a second trade. This I was actually able to help members execute, but me personally, I didn't execute since I was already in a GJ trade. So this is what happened. In our key level, okay, so I don't want you confused as to wondering why. Okay, it's actually a rectangle, that's why it covers a range of prices so that you can find a fake out easier. It's not one price. So when price shot up then closed below, this means price moved up with volume, but there was not enough volume to break above this and continue the movement to the upside. So closing below this would have been my second entry at the break of this candle low or at the flip of the current candle. So let's take the middle. My stops just above the previous 15 minutes. As I wait for it to fill, this here would have taken 80% of our profits and moved price to break even as we wait for it to fill to the next range. And that would have been today's trade. Basically, that's what counter trend trading is, and the vice versa is true for sales. So counter trend is, in summary, price moves to the upside, makes support, breaks the support, you enter short-term scalps. If the higher time frame bias is bullish and you have lower time frame entries, you can execute on short-term scalps, maybe enter, take your profit at 10 pips, But if you get your entries in accordance with the higher time frame bias, these are better entries, and I personally like taking trades with the higher time frame bias. As a beginner, just look to take trades which are aligned with the higher time frame bias, and let the counter trend trades come later when you've gained enough experience and you've watched it happen in the market. So as you have seen, me and the group, we've watched this and also this. Since this was a resistance, price pushed above, closed below, we would have executed on this. So watching this adds more experience so that the next time we see this setup, we're going to execute. And with that, if you have any questions, leave it in the comment section below. Follow me on Instagram, where you could ask questions for faster replies. You could join the free Telegram or the paid, whatever floats your boat. See you next time. Sovrenfx out.